Hello and welcome. You're watching Business Today TV. I'm Sakshi Batra, and this is a fresh and new edition of BTS, that's behind the scenes. And this is a show where we share a sneak peek into the latest issue of the Business Today magazine with all our viewers. And joining in to discuss and to share more insights from the current issue with me are Ashish Rukhaiyar. He is the senior associate editor of Business Today magazine. Also joining in with me is Krishna Gopalan, executive editor of Business Today magazine, and Sohini Mitter also joins in. She's the senior editor at Business Today magazine. Welcome to all of you, and thank you so much for taking the time out for this discussion. And now to reveal the first look, this is the current issue that I have already got my hands on, and it's already out on the stand, so everybody can go out there and grab your copies. And of course, like you saw, this first look of the cover is of Gautam Adani, and the cover story is on the way Gautam Adani now faces the biggest challenge currently being faced after all those allegations that were raised by Hindenburg research report on January 24th. And after that, we've seen a whole carnage in the stocks of Adani Group following that as well. But the way the narrative for Adani Group has changed is something which is very stark. In 2022, everybody was talking about the dizzying heights to which all the stocks were really rallying to, the expansion of the market cap to almost 100% rise that we saw in the second half of 2022. But in 2023, it has been a complete change, because the investors who were celebrating the rise, perhaps also feeling a FOMO in 2022 with respect to the Adani Group stocks on the stock markets, are now actually also feeling stuck and are also regretting having some of those stocks in their portfolios with the sharp fall that they have seen, and no options of exiting, with most stocks still stuck in the lower circuit as well. We'll get down to understanding more about this. So, Ashish, let me kick start with you. This just happened a day before. Adani's FPO was to come, the biggest FPO in the history of Indian stock markets, 20,000 crore rupees. But the withdrawal of FPO right after the reports, and this was also after when the FPO was successfully subscribed to, was a huge step. But it seemed like the group did not have much of an option. Help me understand, what are you getting as a sense from most of the market players that you spoke to, talking about, and what is the road ahead for Adani Group going forward?
So hi Sakshi, thank you for having me on the show. And you're right, it was really a big decision for Adani Group because, as you also rightly said, it was the biggest ever FPO to hit the Indian stock markets, and it still managed, given all the negative news flow around it and around the group, the FPO still managed to scrape through with getting subscribed 1.12 times. But if you look at the stock price, I mean, the price band for the FPO was, I mean, if we round off the numbers, it was between 3,100 and 3,300. And the market price at during the FPO was fell to around 1,000, though it has corrected a bit, but it was around 1,000 rupees a share. So it was really a big decision for the group to go ahead. It was a big question mark on how the group would look at the future of the FPO, and none other than Gautam Adani himself had to come to the fore and said that going ahead with the FPO would not be morally correct. So it
Correct.
was actually a very big decision for the group, especially because if you see the objects of the FPO, why was Adani coming to the stock market after so many years? One was obviously to increase the float or the investor base of the company, but other important part was the company or the group was trying to repay debt totaling around
Yes.
4,200 crore from the FPO proceeds. Not to forget around 10,900 crore for capex for its green hydrogen, airports, and roads. So it was as you also rightly said, it was a very big decision. And interestingly, market players are saying that the group now needs to strengthen the balance sheet. If you see our story,
Yeah.
we have Mark Mobius saying, and I quote, the key for the group is to strengthen the balance sheet and probably cut down on a number of projects in order to reduce the debt. So now it is not the time to raise debt but to reduce it. So market players are not questioning the quality of assets as such, but they're clearly saying that the growth and expansion plans of the group will have to be reviewed.
Sure, absolutely. But the stock prices, if I talk about, they've already corrected quite heavily. But what is the outlook on the street? At this point in time, there were two narratives that we've been listening to. One is that there is still a confusion of whether the Adani Group is just too big to fail, whether the stocks can, perhaps just go down to dust, is something that one sect is completely in disbelief in. The second, section of the people or investors are looking at this as an opportunity, perhaps the fall of 40% or 30% of the kind of correction that we've seen in some of the stocks, and they're looking at an opportunity that perhaps this could give them an opportunity to buy into the stocks. Although the analysts community, very few of them are talking about the Adani Group stocks, but they are still cautious at this point in time. Tell me, what is the road ahead according to you?
You're perfectly right, Sakshi. I mean, if you look, I mean, we all know that markets move on sentiments, and the sentiments are clearly not positive around the Adani conglomerate. The stocks have
Yeah.
corrected a lot. If you see the Adani Enterprises, which is the flagship company of the group, I mean, today, if we say, not many would believe that the stock was around 4,200 in late December. So
Yes.
it's less than 3 months ago. It was well over 4,000, and today it's around 1,600 or 1,700 a share. So obviously the stocks have corrected a lot, the valuations have corrected a lot, but concerns still continue. So one can clearly say that the group or the stock is not clearly out of the woods, because
Hmm.
the sentiments are weak. Any negative news flow, it makes it very brittle for any stock when it is in the midst of a lot of negative news flow. So any negative news flow and the stocks could further correct. Interestingly, I mean, we already have seen all the reports that mutual funds have stayed away from these Adani Group companies. Most of the fund houses, we spoke to a few large fund houses as well, and they said that, see, there are two three key elements that one needs to factor in when they look at this conglomerate. One is the valuation part, and the other is in terms of business. So
Yeah.
valuations, though many people might think that the valuations have corrected, so a lot of new investors or potential investors might start looking at the group stocks, but fund houses say that valuation is just one part of it. They still have a lot of concerns when it comes to, say, governance, transparency, and they think that all these issues still need to be addressed. So clearly, if you speak to marketplace, the outlook is still bleak. They say that it's not out of the woods and any negative news flow, and they say that it's maybe if, the worst is already behind the group, but still they anticipate a lot of negative news flow in the coming days. And given the kind of sentiments around the stock, any negative news flow could further pull down the stocks.
All right. So the worst may be behind, but the dust is not settled as of yet. Thank you, Ashish, for that outlook. Krishna, let me come to you now on the debt concerns right there, and how Mark Mobius and the top market experts are just now talking about how it is absolutely essential for the group to now look at reducing debt rather than expansions. But does it mean that the massive over $100 billion kind of a growth plan that had lined up, that the group had lined up, will get derailed? And you think you must have spoken to a lot of bankers. Is the group really facing a difficulty on raising debt right now?
It's like this, that's actually, we have to look at two parts here. The outlay in terms of capex that the group announced at the time of the FPO was $107 billion. And over half of that was meant to go towards green hydrogen. This is obviously a big ticket project. It would have given Adani the scale, would have given them the opportunity to bring in big ticket money from overseas investors. At least based on our conversation with bankers, and they made one thing very clear. They said historically lending to the Adani group, or any group for a matter with a pedigree, is on the basis of cash flows and not on the basis of equity. But that said, the hit they've taken on the bosses because of this and the reputation damage will obviously mean that banks are going to be a lot more circumspect as far as lending to the Adani Group is concerned. There's no doubting the fact that they have high quality assets. And let's be very straight about this, be it ports, be it roads, or most recently, the biota
Yes.
of faces in Abuja, which is about 70 million tons of cement capacity in India. So that apart, they've said, let's keep the quality of the assets out of the picture because there's no doubt on that. There's no doubt on the financial numbers. And one banker actually went as far as to say that this is not another Satyam, for God's sake.
Hmm.
So that part is absolutely clear. The only issue is the ease with which the money was historically raised in terms
Yeah.
of either through a telephone call or the fact that my PNL was good enough or my balance sheet was good enough to raise the money. That level of ease is something which is going to take a beating now. So we have to make the differentiation here. This is not about the robustness of the projects, but just the ease with which the money would easily come into the, I mean, almost like saying the big checks would be kind of written like that. So I think that
Hmm.
element of ease is perhaps going to take a bit of a backseat now.
Right, right. Now, you did talk about the quality of assets that Gautam Adani really owns and the group really owns at this point in time. So you've talked about the raising of debt part, but when it comes to paying off of debt, debt repayment schedule going forward from here, does the group have enough cash flows at this point in time which can offer a cushion as far as debt servicing ability is concerned?
Yeah, let's take the current year, 2023 calendar. So they have about $100 million to pay off this year. Now, on the face of it, $100 million, which is about 850 crores, is not a large amount for the group at all. So this year is taken care of. In all, going all the way till 2050, we are speaking of a little over $9 billion actually, in terms of the debt
Yeah.
repayment schedule.
Yeah.
Bankers we spoke to, group officials we spoke to off the record, are of the opinion that current cash flow in the business will be more than enough to service the particular debt component is concerned. And even if you speak to analysts, they will completely gung ho about the fact that the existing businesses are on a firm wicket. But
Okay.
just to go to the previous point, the moment they raise capex for a new project, obviously existing cash flow will get affected. So the consensus therefore is very clear. The existing projects, even if they continue status quo, they'll be in a position to repay the debt. But the
Yeah.
ability to kind of go out and say, look, I'm going to make this $10 billion or let's say $50 billion capex announcement, I'm going to see the likes of that anymore.
Right, right. But overall speaking, just to give us and our viewers a little bit sense of, since you've done such an in-depth research on the entire issue that is being faced by the Adani Group, how big a dent is it on Gautam Adani and the Adani Group's credibility? And can it be restored? And what will it really take for the group and the management to really do to undo the damage?
So actually, it's like this. If you look at infrastructure as a space India, you have a handful of players with scale, and Adani is one of them. So the reputation damage obviously is colossal because the moment you have such a large level of dependence on one person who has ports, he's got power, he's got roads, he's got renewable energy and cement to top it. So which means the dependence on one person being so great, obviously the markets are going to be a lot more cautious as far as lending money to either raising money or lending money is concerned. So that part is
Sure,
definitely going to take.
sure.
The other point is just to go back in time. Adani Enterprises went public in the mid 90s. And that stock, if you look at the investors who put in money at that point in time, they are still sitting very pretty. Or for a matter, Total, which put in cash in Adani's, city gas distribution project, they're also sitting very pretty on investments. If you remember right, it was 8
Sure.
to 10x of the total thing. But the point is that frenetic bull run they saw in each of the stocks that takes a beating. And whether you like it or not, investor sentiment, much as one can kind of brush it aside, it does make a difference as far as the ability to raise money is concerned because people do look at the way the stock is performing. It's hard to think of a case. There's a certain worry because he was kind of known to kind of know the right people and stuff like that. That part is a little uncertain now. From a company or from a project point of view, it'll be status quo. He'll have to go easy on the big ticket projects he has in mind. But as far as the existing projects are concerned, he's sitting all right. That said, we'll have to say all right for the moment.
All right. Well, thank you so much, Krishna, for that update as well. I'm sure this will make it a very, very interesting read for all the viewers, most of the investors who've been really wanting to seek more insights as to what really is going on in the Adani Group. Where does the group really stand on the debt position, on the balance sheet, on the cash positions as of now, and the concerns raised by Hindenburg report? What are the stock market experts saying? You'll get a 360-degree view if you are interested in getting to know about what exactly is happening with the Adani Group right now in this issue. So definitely this is going to be an important one. But let's move on from the big offline business to now an online business, the e-commerce space, which again has been a buzzing space, but of late has also seen a lot of troubles brewing right there when it comes to companies looking at profitability right there too. Now the company that is in focus in this issue is Misho, and the rapid rise of Misho in the e-commerce space. So Sohini, let me come to you since you've written this story. Talk to us about, what have you really garnered from the management right there when it comes to the kind of rise that we have seen of Misho in this e-commerce space, and has it been able to garner specific niche in this duopoly, triopoly kind of a situation that we had seen so far in the e-commerce space?
So yeah, Misho has been, a very prominent startup in the last few years, not just because of the amounts of $1 billion that it has raised from investors, but also because it could, create a niche for itself in the market. As we know, as you rightly mentioned, the Flipkart, Amazon duopoly has been around for a while. Misho has emerged as a kind of a third alternative for shoppers, especially in India's small towns, which was kind of unaddressed by the larger players. So what happened until about 2021, and especially led by the pandemic tailwinds, is Misho grew rapidly. And in order to grow rapidly, it spent also a lot of money, to acquire customers, to do sales events, to attract them with other kind of promotions and stuff. So the challenge right now for Misho is, it has to take a very, look at it. It has to take a look at its growth at all costs, mentality, which has come under the scanner in the last 1 year, which has not been great for the startup ecosystem because the funding has kind of dried up, challenges in terms of profitability, layoffs, etc. All these things made news. Misho, like any other hyper-funded startup in the Indian ecosystem, has also come under the scanner because of that. While growth is great, it has to take stock of its losses, which are also rising, and curtail them and show a clear path to profitability. I think that is what the
Right,
story kind of
exactly.
explores.
Exactly. Right now, just like how you pointed out that these are the fumbling blocks, it does need to curtail the losses and turn a profit. But what really lies ahead, and what does the current situation really look like when it comes to balancing both growth and profitability at this juncture?
Sakshi, from my conversations with the Misho team as well as investors and other people in the ecosystem, it is very clear that a new economy company like Misho cannot
Hmm.
surrender growth completely, because then, it will not be any different from an old economy company. But what they
Yeah.
have to do is they have to curtail the things which are non-essentials. Like what we saw in the last few years is startups getting into a lot of allied categories away from their core business because there were growth opportunities, there was money free flowing, but all that has stopped now. So for Misho, the goal right now is to focus on its core business and cut down all the flab in the in its operations. As the story also mentions, that last year Misho kind of cut down its grocery operations to focus on pure play e-commerce that it has built over the last few years. So I think the first thing that they need to do is take stock of what is non-essential, cut down spends there, grow a little more moderately, and focus on things which are absolutely important. We have all read about Misho's fancy ESOPs and other policies and stuff. I think the
Yes.
company is also taking a hard look at that right now to bring down costs and make sure that it can turn profitable as soon as possible. And Misho is looking at gaining profitability by the next fiscal, which is FY24. So that is its number one priority right now, even I would say ahead of growth.
Absolutely. Well, thank you so much, Sohini, for that update as well. That looks like an interesting read if one wants to really get an insight into what is really, ahead, looking ahead for the e-commerce space as a whole, and for a newer player, more recent player than Flipkart and Amazon for sure. When you talk about Misho right there. All right, Krishna, I'll come to you just to sum up for all our viewers right there. Which are the other key stories that one can look forward to reading in this issue?
We have a
Yeah.
full-blown interview with the Finance Minister Nirmala Sitharaman. Lots of analysis in the budget, and we have a few interesting guest columns as well coming in from experts. The other thing which has come out reasonably well this time is the BT interview, and it's with Bob Moritz, who's the global chairman of PwC, and he's actually spoken at length on where India is today vis-a-vis China. He's spoken at length again on why he believes Europe is going to be in a bit of a crisis with what looks like an impending recession, and what to look out for as far as the US is concerned. So I think in that sense, it seems like a pretty good roundup because we have the Adani issue, which is pretty much the flavor of the month.
All right. Well, I'm sure all our viewers will be, fascinated to read all of those stories as well. That's an interesting bunch of stories to read right there. And also, let me showcase to all our viewers another thing that is very going to be interesting for all of us who have been very keenly following, the corporate industrialists as well, and how BT Golf as a tournament really went on to the second leg, the Mumbai leg right there. And you can actually see the entire spreadsheet of the who's who of India Inc. really participating in this BT Golf, and how we're looking forward to the next leg that will happen in Hyderabad on the 25th of February. And you can definitely look at some insights from the BT Golf from the Mumbai leg in this issue as well. And with that, we wrap up this edition of BTS, that's behind the scenes. Thank you very much, Krishna, Ashish, and Sohini once again for giving us all those insights. I'm sure this is going to be a very, very fascinating read for all our viewers. And I urge all our viewers to please go out there and grab your copies, because this issue is going to be a very, very fascinating and an informative read if you want to get to know more about the Adani Group, and also in the e-commerce basket as well, and much more than that you will find in today's issue. Many thanks for joining us. But do stay tuned on to Business Today TV to catch all the updates from the world of business and stock markets. Many thanks for tuning in.